G'day. Just a response, quick response this morning to the painter. Now, I've known this guy for a while on YouTube, friend of mine, and it's just a really simple comment and very relevant. It's right. I just want to identify some of the things. So the comment is, regarding the last video, we never really own land here in Australia. We are just leasing it. If you don't pay the rates, you lose it. Real estate is like shares: buy low, sell high. But it's rigged against us. Capital gains tax will keep you broke. Now, I agree with you, it is rigged against everyone, okay? And unless you understand this stuff that I'll put on this channel. So the game is rigged, that is 150% right. That is right, there's no two ways about that. But it's rigged for investors, business people, investors. It's to do with the tax system. So what you actually said is the actual very reason it's rigged for us is because of the taxation benefits. So capital gains tax, you won't pay it on your own property. You got a 6-year window, live in a property, sell it, and you won't pay any capital gains tax on that property. Now, the immediate problem for that, and for people that that do flip houses, it's not something I want to get into. I don't flip houses unless there's a problem with a tenant or a problem with the property or the neighbour, something I can't physically fix myself or change the tenant, do something to actually make that property then perform for me. I won't sell a property at all because of capital gains tax, because of what you do is you refinance full equity buy another property. But the actual the taxes on real estate, yes, you're right, you will actually, if you don't pay your rates, they will come and take your property. That's not actually a reason to not play the game. So that's just another cost associated with property. Like there's lots of costs. There's more costs associated with property than a lot of other investments, which is why I stress that if you're in real estate, if you're in like building trade, any kind of hands-on sort of work, real estate is good because you can keep those costs down, generally speaking. Yeah, capital gain, flipping houses, I'll give you an example why that's not really a good long-term strategy. Now it does pay people. I know people that have made money doing that very conservatively. Buying a house, living in it, paying a bit off, and value goes up. They sell it, they buy another house, they live in it, value goes up. They've done it 2 or 3 times. They've got one house. Now it is a very big house, and there's a tax efficient way to do it. But the problem with that is, unless you're some kind of real estate professional or actually understand what's going on with CPI, inflation, all that sort of stuff. Now, I'll get into that entirely in another video because that's very detailed and long. I'm not going to, let's just assume for now we can all see properties going up. I'm not saying anything strange here. Over time, well, even a short span of time, I'll give you an example. Recently, a mate of mine owns a real estate agency, and I talked to him quite a bit, and we were talking about one of his sellers that sold a duplex. Now, I don't know who this guy was. I just heard the story, and I assume this is happening everywhere, but this is just one particular story. And I'll give you this example, and I'll give you an extreme example of why you don't want to sit in cash for too long. So this guy, this person, Gold Coast based, sold a duplex, and as I understand it, he couldn't, in 2 months after he sold it, he couldn't afford to buy back the same duplex. So that alone, forget about taxes, rates, all that other stuff. That alone is a reason you don't really want to get into flipping houses unless you've got really, really good high-level knowledge. I mean, it's not really something I want to get into, flipping houses. As I said, unless it's something that the asset, like the piece of real estate, is not performing, or I have a problem with a tenant or a neighbour or something I can't physically fix, is the only reason for me to sell a property. Rather than pay capital gains tax and play that game, what you'll find is over the life of your loan, so I'm talking about positive geared rental properties. Whenever I'm talking about rental properties, assume I'm talking about positive gearing. I'll have to keep repeating that, but that's what I'm talking about. So you're putting in a deposit, probably 20% down. You're buying a property at the right price or below market value. It's cash flowing to you from day one. And then your expenses and everything is paid by the tenant anyway. Like, it's not really... I physically log into the bank. Actually, I'm about to change that, but I physically log into the bank, and all I do is move money from one account to the mortgage, and I just go like that, and that's literally a couple of mouse clicks. That's your passive income. But what I'm actually going to do is I actually was talking about this with my wife last week. Is I'm actually going to send the actual loan numbers to the real estates, and I'm not even going to be doing that anymore. So it's just going to be, I'm just going to be logging into my phone periodically and checking it's there. It's not, it's kind of truly passive at that point. But that's kind of a just funny discussion we had last week about actually doing that, getting that, because it comes into my main account, and then I transfer, pay the mortgages from there. But what you got to understand is people are, I'm not, even though I'm physically paying the mortgages, it's being paid by someone else. So I've got a poster on my wall, other people's money. Now that's a OPM, other people's money. That's a financial acronym. Generally speaking, it's a Danny DeVito movie, very good movie. It's sort of like Wall Street before Wall Street, I believe. It was just same kind of movie, but it was a comedy. It was a semi-serious, like a dark comedy, and it's one of my. I've got the big A2, really big movie poster on my wall because I use that system and part of my vision board sort of thing. So what he said is right. The capital gains tax, the game is definitely rigged against you. It's rigged against anyone who's doesn't hold assets. So assets, I'm going to do a book on what is an asset. Most people think they know what an asset is, they don't. So I'm not going to reveal that in this video because I sort of want to span these out a little bit because I want to speak, like do one video on that and another video on this. So I don't want to go into too much detail. Over the course of time, I will be going into a lot of detail. But generally speaking, the capital gains tax is not going to be a problem for me. The rates and insurances, the costs are so low. Over the course of time, it's not even worth worrying about. And the other thing is the tenants are paying these expenses. Now, obviously, a little bit of knowledge to buy cash flowing property. You've got to have a little bit of a learning curve there. People generally just like a house and they buy it because they like the house, and that's a lot of people. On my first few, I did that as well, but there's actually numbers you got to look at and stuff like that. But the stuff I'm buying now is cash flowing from day one. I'm putting healthy deposits in. The last build I'm doing for my own house, I actually didn't put in. Sorry, I did. I put in $12,000, so I actually pulled equity from several properties, which took the loans up like a smidgen, and I already had created stacks of equity anyway. And then it was 12 grand out of pocket for my new property I'm building. So that's a very low deposit, but I've still got a big chunk of equity when that thing's finished, even right now. So yeah, I agree with your sentiments. The game is rigged, and that's 100% true. The game is rigged. It's rigged for business owners and investors who own assets. And I'll get into a later video what an asset is, and most people, I'm talking 95% of people, don't actually know what a definition of an asset is. Not an Oxford dictionary definition. I'm talking an actual financial definition of what an asset is. So I'll get to that in a later video. But I'd buy below market value, cash flowing property, sensible use of debt. Your tenant is paying all of those expenses, including the rates, and that tenant is not going anywhere. Vacancy, some people say, well, you have vacancy. Well, with vacancy is a function of price. So if your property is vacant, it's generally too dear. So you have to meet the market. At the moment, I'm watching rents jump up $50, $100 a week because of what's happening in the property market. So the reverse can happen, but it generally always grinds higher over the course of time, and it's always done that. I'm actually reading a book at the moment. It's based on 300 years of land speculation in Western economies. It's an academic level textbook, and it goes over the property cycle and in quite a lot of detail. So through the gold rush, through the building the railroads in America and Europe, all those places, and what happened to the land speculation in those areas. The other thing I'll say with flipping houses is you're at the mercy of the market. So if I'll give you one example. There's a guy I know of through Real Estate Mate that's just sold a unit on where he is. I won't say where he is. And he 2 months later can't afford to buy back that same unit. So if he was flipping houses, he would have lost money by selling. Obviously the capital gains tax thing, but he can't then afford to buy back that same house 2 months later. Now, a little bit of an extreme scenario with what's going on in property at the moment. There's no lumber. There's no timber because of this building boost that happened and people withdrawing super, all that sort of stuff. I have been talking about that on some other channels, even on my other channel, for the last several years, about what's going to happen when property drops, and that was the time to buy, and I was getting a lot of shit for that. Now, obviously, you can see what it's doing, hopefully. So, I mean, that guy can't afford to buy his own property back only 2 months later after he sold it. So, I mean, your capital gains thing, yeah, that's a cost, unless it's your own home. But sitting in cash in this environment for an extended period of time is almost financial suicide. Just using that example I just gave you. If you go to a real extreme example like a Weimar style hyperinflation, which I believe we're looking at a very, very big inflation. We're just seeing the start of it right now. I'll go into that later in another video where we are in a property cycle. So this is the start of the second half of the cycle. So that first half, that's only the first half, then we had a dip. Now this is the second half, so all the money's made in the second half. The smart money gets in before that, but these are the biggest gains right now to be had over the next 10 years. Now I will go into that in another video, but I just wanted to answer that question on, yes, you're right, the game is rigged, understand that, but it's rigged for business owners and investors, and it's based around the tax system. So real estate, you can use things like a depreciation schedule. You can depreciate the building, all the renovations, the work you do, and the travel costs, or you used to be able to, you can't do it anymore because they changed the rules around that, but most of my stuff has been bought, or a lot of it, before that, so I can still claim travel costs to those properties to do maintenance and look and view them and whatnot. But you can't do that anymore. I think they nipped that in the bud about 3-4 years ago. But that's just one cost. So your rates, insurance, property management fees, all that sort of stuff ends up being paid for by the tenant. So again, when I'm talking about investing in real estate, I'm talking about positive geared real estate, generally speaking, unless I say otherwise. Like very select reasons you would use negative geared real estate. That's like if you're really high income, like a doctor or a lawyer, and you might be on $500,000 a year, and you're paying 42% tax straight up. So in that scenario, it's sensible to negative gear because you need to get that tax back. But I do positive gearing, which is the other way. So I'm getting income from the debt and the assets straight away. So I will get in another video, what is debt and assets. I won't in this video. Assets and liabilities. Now, a lot of people think they understand what an asset is. Very, very few people understand what an asset is. Now, I'll get into that in another video, which I want to do a video just about this one book that's going to go into this. So I'm not talking about the Oxford definition of what an asset is. I'm talking about the financially correct definition of what an asset is. So most people, and I'm talking 90+% of people, don't know what an asset. Couldn't tell you, sit across from you and tell you what an asset is. Now, it's a very specific definition of what an asset is, and again, it's not in the dictionary. This is a financial term, and I'm going to go into it in another video. Basically, that all these costs, like rates and water, yeah, you don't really ever own it. If you don't pay your rates, so we'll come and get it. It's not really a consideration for me because the cost is so low, and again, the tenant is the one that's paying that cost at the end of the day. I'm just transferring money from one account to this other account every fortnight, which I'm actually about to not do that. I was talking to the wife, I'm not even going to be doing the logging in and transferring anymore, which is kind of funny. You're talking true passive income. And then the loans are sitting there paying themselves off, and you're not even making the payments. Like physically, it is being made in my account, but I'm not even going to be logging in anymore to make these payments. So kind of funny, but yeah. So I agree with I just never really own land here in Australia. We're just leasing it. If you don't pay the rates, you lose it. Real estate is like shares: buy low, sell high. But it's rigged against us, yes. Capital gains tax will keep you. So yeah, I agree with what you said. I just don't agree it's a reason to not play the game. And death and taxes, two facts of life, can't get around it. And it's just cost of doing business, opportunity costs. So Anyway, that's all I'm going to do for this video. Next video, I'm going to start doing some book reviews. So I'm going to probably start reviewing some books for personal finance, the most important ones I've read, and most people will read these few books I'm going to mention, but I'll give you my own review of these books, and I'll provide the links to buy them, and we'll give you like a really good understanding of personal finance, which most people don't have. Like small businesses fail, in my view, is what I think. People say most, 80-90% of small businesses fail in 2 years. And that's right, this is what happens. But I actually think that's due to a lack of financial knowledge rather than the business. You can have a very good business and be shit with managing money, and your business is going to close no matter how good it is. So I actually think it comes down to what I call financial education, or is referred to in this book I'm going to review soon. And I actually think it's down to that, is people don't understand even the most basic stuff, and it is very elementary stuff. When you're reading it, it's like, I'm talking almost primary school level stuff. It's not taught, what I'm talking about is not taught in school. You were taught, based around the Industrial Revolution, we were taught to, in school, and school is still backward like this, you're brought up to be a wage slave and work in a factory, and work in a Holden factory, for example, collect your wage, get your pension at 65, and that's how the whole school system has been set up. So it's not actually, it never really has been based around entrepreneurship, investing, because that's really not what the system, the industrial, manufacturing age wanted. They don't want people going out there doing their own thing, because then they don't have willing workers and participants providing those products that they can sell and make money on. Anyway, I'll get into that in another video. So I hope I've covered off on that well enough. The costs are there. Yeah, you don't truly own it, but it's not really a consideration. It's a cash flow